As 2019 starts to heft itself towards the finishing line, bloated with the same unresolved geopolitical issues that defined the previous year, the markets remain acutely attuned to the ebbs and flows of the US-China trade situation. Last week, you had President Xi and Trump both trying to allay the market's fears. The Chinese leader stated that though Beijing is not afraid to fight back, he claimed that the country has been working actively to try not to have a trade war, sort of getting in the little dig that China did not initiate the trade war in the first place, and it's not something that they want. Trump, meanwhile, said that the nations were very close to a deal on Friday. Again, it's the kind of comments the markets have heard before, but given how muddy things were last week, it sort of ended the week on a slightly more positive note than where it began. Monday, the scene that continue. Monday saw a report by the state-run Global Times echo Trump's claim, saying that the two superpowers are very close to completing phase one of the agreement and that no heed should be paid to the negative headlines that had been seen elsewhere. This followed on from China announcing on Sunday that it would seek to improve intellectual property rights protections, including raising penalties on those that break those intellectual property rights. Though not necessarily made explicit the reasons behind that move, it was sort of an implicit olive branch to the US, given that intellectual property rights were one of the key sticking points for the US, and perhaps something that was going to become a major issue if the deal got to a phase two. Something that a lot of sort of cold water had been poured on the idea of a phase two of these trade deals over the weekend by many different sources, given just how arduous the yet to be completed phase one has been. It's sort of a sign of just how trade focused the markets are at the moment, that they're continually willing to rise and fall on sort of the most flimsy kind of updates from both sides, rather than waiting for something a bit firmer action-wise. The Dow Jones, though, having hit 28,000 recently, never really fell too far away from that level, despite things getting increasingly muddier during last week. At most, it fell to 27,750, whilst, multiple times sort of getting back near towards 28,000. I guess the big question now is, after a couple of weeks of confusing statements and what appeared to be at points a shrinking chances of a deal, are the scales now tipping back towards a phase one agreement being signed? And I guess then the follow-up question to that would be, when exactly would we expect the deal to be signed? 2019, obviously that time is shrinking for any deal to go through this year. But if it were to be pushed to 2020, how soon into 2020 would a deal materialise? Beyond the trade war, and as ever, it's very difficult to look beyond the trade war. It's an odd week for the US markets, given that it's somewhat contracted by Thanksgiving on Thursday. Before that, there is a big data dump on Wednesday, giving investors plenty to dig into if there isn't any other trade war news to sort of distract from the figures. Alongside the Chicago PMI and the core PCE price index and the durable goods orders reading, the big number will be the preliminary third quarter GDP reading. The advanced reading, which is sort of the first glimpse of the figure, came in at 1.9%. That was far better than expected, and only a tad below the 2% seen in the second quarter. So any movement on that could be of interest on Wednesday, like I said, as long as there aren't any further trade war developments to distract investors from those figures released on Wednesday.